Hey, hi. Hi, Jacqueline. Great to see you too.
Chat yesterday.
Yeah. It was a really good chat yesterday also for a preliminary discussion. First of all, I would like to welcome everybody out here to the World Blockchain Summit in Singapore. I know that a lot of people have traveled directly to the conference. So it's really good for the efforts you have taken. So thank you very much for that. And yeah, let's start our fire chat.
Very nice to meet you. And Brian's got such an interesting background. Brian, I thought we would. Why don't we start with the insights on the digital space?
Yeah. So I'll give you a brief introduction about myself. So my name is Brian KUTTIKKAT, and I represent from India, a country which you might all know, the world's most populous country, currently surpassing even the country like China. So I represent KoinBX, one of the leading global crypto exchange, and we were based out in India. Our base roots, that is our 90% of the population, our 90% of our users are currently from India itself. And I look after the operations part. I'm the chief operating officer in KoinBX. So KoinBX is an Indian exchange which gives a lot of benefits, like even crypto deposits and withdrawals. So there is no other exchange in India, in the tier one exchanges in India, which allows crypto deposits and withdrawals. But we work hand in hand with the government, and that's the reason why we have enabled crypto deposits and withdrawals. At the same time, we have fiat on-ramp and on-ramp, which means somebody can actually buy with the INR currency at the same time, buy with various crypto deposits too. So that is the brief background about myself and my company, which I'm representing. That is KoinBX.
Thanks, Brian. I think all of you have heard my background, and I just want to say it's actually a very exciting time for DEXs, and we see the shift also in the CXs. Citibank has predicted that by 2030 there's going to be a 80x growth rate in DeFi and decentralized exchanges. So we see traditional financial institutions getting involved as well. And, this last month, MAS has issued a new digital asset framework, and MAS has also been partnering with an expanded group of financial institutions, and it's been very exciting. The focus has been on asset and wealth management, fixed income, and also FX, all the areas that the Australian Bond Exchange is also very, very much focused on. So it's very exciting times, isn't it, Brian? And we see, the rise of DeFi enabling the decentralized exchanges. And what we're chatting about yesterday, getting capital markets more efficient, getting more innovation into capital markets, and also bringing more illiquid assets onto capital markets to increase access to investors. And given your experience on the operational side, would you like to sort of share with us some of your thoughts on the DAOs and the AMMs, the automated market making?
Yeah, definitely. So if you see a lot of points Jacqueline has already covered, already has pointed out. First, starting with the capital markets. Now, like if you see why there is an increase in the DeFi space, right? Because if you see today, if you are sending a transaction, that is sending money from here, for example, from Singapore to US, it takes 2 to 3 days. It is such an inefficient, kind of a structure or a process. At the same time, when you mention capital markets, if you buy a stock or an equity, it takes T+2, that is transaction plus 2 days to get credited into your account. I mean, why? Why does that happen in this age of internet when you can simply send an email out there? So capital markets is taking T+2, you're sending money to some other country, it's taking 2 to 3 days. You can understand how inefficient the whole process is. And that's the reason why there is decentralized finance coming in. Because the whole thing, that is the banks which is sitting in between, that is the banks being an intermediary, they want to make a lot of money out from there. And that's the reason why they make the processes very slow and extremely complicated. And that's the reason why you see that today technology is coming up so strongly that it want to disrupt this whole process of capital markets, sending money, remittances, and all the aspects. This is just that I'm just touch basing on the certain use cases of DeFi, but this is where the root cause of the problem is. that the DeFi structure, the traditional DeFi structure is highly, you can say, complicated, and it is not feasible in this internet age.
That's right. So previously, I was CEO of a private markets exchange, and definitely we've seen so much progression in blockchain technology. So we actually had our exchange on blockchain initially back in 2018, and the holy grail of an exchange is the security settlement timing. And during that period, we had on blockchain, on a decentralized basis, DLT ledger, we could not get the T+0 achieved on blockchain. But today, we hear empirical evidence with the development of layer 2, layer 3, we can achieve T+0 on blockchain. And Accenture has actually asserted some of their work with the clients in achieving that. So that's very, very exciting. Similarly, at the Australian Bond Exchange, we've been talking about that as well. And blockchain, with the inclusion of AI advancements, are definitely very, very exciting with T+0 settlements, increasing liquidity. We haven't talked about liquidity. That's the other exciting part.
Yes. That's another exciting part. So the moment when we see a lot of these DeFi and DEXs and the DEXs when come into it, there are a lot of trends and challenges out there. Like for example, in the DEXs, you see there are a lot of DEXs on each day basis, which is there. However, it's very easy for any crypto or a blockchain to enter the DEXs. But the main problem is the liquidity, because the liquidity in certain exchanges is extremely low. Now there could be an exclusion of PancakeSwap or a Uniswap. But if you say other DEXs, the liquidity is a very big problem, and especially it's only in the top 10 tokens, or you can say the top tier 1 tokens where there is very good liquidity in the DEXs. Otherwise, the liquidity it's a big mess in the decentralized in the DEXs. But when it comes to the centralized exchanges, that is SEXs, there actually it is, you can see a lot of market makers out there. So we need to have a lot of automated market makers in the DEXs part so that liquidity gets increased.
That's right. So on the centralized exchanges, I remember, one of the hurdles to getting a very stable and healthy and robust exchange is building a depth and breadth of buyers and sellers, so both the buy side and the sell side, and getting global inclusion. So interoperability comes into play. So we can chat about that a little bit, as well as with the liquidity. Definitely the AMMs have very much helped with increasing the liquidity. Uniswap led the way, and then we have Curve, and now we have Balancer, which actually then increase it 8-to-1 ratio, and getting that liquidity pool secure. So then the next chapter that we're talking about now is the security. So both the security and what was it?
I think the DAOs we are talking about.
And the DAO. Yeah. So what's your view?
Yeah. So from the security aspects, there is definitely a lot of security issues when it comes to the DEXs. From the DeFi aspect, because currently also if you see, there was a lot of attacks from on a DeFi aspect. Like the classic example is the most known token, that is Ethereum. Ethereum, some people call it Ethereum, some people say it's Ethereum. As per the dialect, we can actually talk about that. And if you see, there was a similar attack on this. That's the reason why we had Ethereum Classic, and that's the and another Ethereum. So the major reason is that earlier it was not evolving. It took a lot of time to get evolved in the system. There were a lot of attacks, there were a lot of code issues in the earlier days. But now things are getting more robust. And today you see that there are a lot of these tokens which is having very robust technology in the backend. And that's the reason why you can say that now it's time to adopt. Probably 3-4 years down in the past, it was not the best time to roll out the DeFi aspects. But today, with such robust coding and robust technology in place, I think DeFi can start taking over the traditional finance.
Yes, definitely. And we see a lot of activity in the R&D space and in the project space and innovation space. Goldman Sachs has over 100 projects on this. So that's very interesting. One of the challenges, and I think one of the pieces of work that's involved currently is the standardization and interoperability. We talked about this as well. So to capture, the global inclusion, we're moving towards how cross-border communications and interoperability. Have you been involved in those areas as well, looking at improving the interoperability?
Yes, definitely. I mean, interoperability was the biggest problem for the blockchain. Like, for example, if you I can explain it in a very simple example, that if you just buy a token via Trust Wallet and you you buy a token and then put it in a Trust Wallet, you simply cannot move that from that Trust Wallet to another token, another chain. So it is such when technology was so high, advanced, you see that, a basic transfer of like buying Trust Wallet token to even a Bitcoin cannot be bought because the on-chain transfers were not available. So this is majorly because the interoperability was not there in the past, and at the same time you can see that when interoperability comes in, everything, the whole synergy comes in. All the value unlocking comes in when there is interoperability in the blockchain plane, wherein there are multiple chains. Everybody is running their layer one chains, and it is very difficult for people to actually jump from one chain to another. So I think when interoperability comes, it would be a huge success for the blockchain.
Yeah, for those of us who've been around for a while, one of the major segments that we've always tried to include into capital markets, and one of the biggest segments that have been excluded are the alternative assets, the illiquid assets trying to gain capital and trying to capture also continuous liquidity with the secondary markets. So I think one of the very exciting things now happening with the DEX and the DeFi advancements is the inclusion of illiquid assets into capital markets and actually getting that instrument fractionalized so we can capture or enable access to a broader pool of investors and reduce the value chain in between. So cutting out the intermediary parts where financial institutions used to come into play. And so Brian and I chatted yesterday and he goes, we've got to bring statistics. So I pulled up some stats. So the illiquid markets, the illiquid assets is forecasted to be 42% of GDP in tokenization by 2030. So that is almost a 70 times growth rate from today. That's phenomenal, right? But that means that the capital markets is going to be so much deeper and it's going to be available to so many more participants, which is very fabulous, right? When we talk about democratizing access and financial inclusion and enabling real world assets, the NFTs, to come into play.
Yeah, that is definitely there. And if you see what the 70% CAGR, what you're talking about, that is fascinating. But that is in the developed worlds. Now, if you see the unbanked worlds, like for example, countries like Africa and all those places where, there the growth rate would come in the next phase, probably in the second part of this decade. But if you see countries like emerging countries like Vietnam, India, all these countries, there is a huge potential. And 70% CAGR is fascinating. While we see that 70% is fascinating number, you see that countries like India and Vietnam, which would grow in a crazy manner, like even Brazil. So these three countries would actually grow at a much more higher CAGR, like upwards of 250%, because the infrastructure is laid out there. The only thing is that they're just waiting for a use case, waiting for a solution in the DeFi aspect. So I think while 70% is good, there is huge potential in the emerging markets also.
So Brian, I think you should knock on World Economic Forum's door. They forecasted the tokenization asset market to be over $800 trillion. So what we're saying is it's going to be even more than that. It's going to be multiples of that with the EM world coming into play.
Yes, yes, definitely. Because if you see, today the traditional banks have been focusing only on the basic aspects of traditional transfers, traditional finances, and all those aspects. And if you see, when DeFi comes in, they are there for the people. Now, for example, if you see the banks, if you think that, okay, banks were 30 years beyond, previously, it was banks were therefore as a social institution, wherein banks would actually protect your money, they would take care of your money and all those things. But today, banks are not there to protect you people or anybody out there in the market. Banks are there to only protect themselves. So banks would only protect banks. So that's the whole reason. I know you are a banker earlier. I'm not sure how you'll take that statement, but I do strongly believe and say that banks are there only to protect banks. There is no social inclusion, or there is no social any kind of service related thing from banks to the people.
Let's put some context into what Brian's saying. So I've worked on the ground in 11 countries, as half of it as an investment banker and the other half as an institutional investors with large financial and specialist investment firms. And definitely, you know, we see a lot of practices which can be improved, and definitely for those of us long-term bankers, we're very much advocates of financial institutions being the custodian of the client monies, right? So that the customer is at the core. So it's the how do we keep the customers' monies and assets safe? And so with that, we see a lot of those of us long-term bankers kind of striking out on our own and starting up neobanks and fintechs for this particular reason, wanting to improve the level of trust from the public in institutions. You know, a harsh reminder that financial institutions are intermediaries. You are there to facilitate the transfer, the payment, the remittances, and to actually shore up the value of the medium of exchange, in this case, money. In future, we're talking about tokens. So the reliability of the value, the store of value. I mean, if we look at history, we've got the Bretton Woods Agreement. So it's just to ensure that as custodians and with the fiduciary duty, we take care that the medium of exchange, which is the money, and in future, the tokens, the value would not be eroded, you know, through the system. So smart contracts, smarter capital markets, right? So that's a lot of the mantra, and it's very encouraging to see the younger generation taking force and coming in, getting involved and building these systems, this new infrastructure. There's a systemic change in capital markets. It's very, very exciting. And we have the old guards doing it, and we have the new guard. So at the Australian Bond Exchange, if you go to our website, you'll see all of us are grey-haired ex-bankers utilizing our skills and experience to building something better. And because we're here in Singapore, the MAS, I must say, has been doing a remarkable job. You know, Project Guardian has been extended. Project Guardian is a collaboration between MAS and the industry players, financial institutions, asset managers, and they have, you know, they drive the collaboration is trying to ensure that innovation happens jointly. Lessons are learned, but the integrity is kept within the financial system to protect investors and clients. And just
so you say actually that banks and financial institutions actually protect the investor relations and thing.
I think when the regulators come into play, so I'm very supportive of regulatory environment. I'm very supportive of, you know,
that is definitely there. But do you think that banks protect only banks, or banks are there for the people?
I think
what are your views on that?
So the views are, the global banks are huge, and there are many, many different areas of the banks. And one of the things that global banks struggle with is really the siloed effects and the what is the terminology now? It's the friction internally to generate KPIs, and with that, right, the misalignment of incentives. So that's where the GFC happened, and a lot of us learned lessons from the GFC. You know, what the alignment of incentive. So where a banker's incentive is aligned with protecting the client money. So then we have potentially, the trust certificate between the client and the intermediary increase. And this is why I'm sort of saying, the regulators stepping in to ensure that the trust is rebuilt. So in Australia, a few years back, we had the Royal Commission because there was such a destruction of trust. The biggest thing as a bank, as a financial institution looking after monies, is trust. You've got to have trust in your financial institution. It does not matter whether you're big or small. So peer-to-peer lending came into play because, there was more trust, right? Because you're dealing directly peer-to-peer. And the whole premise of the DeFi is to increase the level of trust, increase the security on the blockchain packets, remove the human element where bad hats could come in to play, greed comes in, avarice and mistakes, right? I think that's the value proposition that we've got to keep remembering. And we have to keep people honest, institutions honest.
Yeah, exactly. I mean, when you say these things, definitely the trustworthiness things makes a big play out there. But if you see, it is because there are a lot of these banks using your funds up in their own manner. That's the reason why today we have all these DeFi, and at the same time, we have DAOs coming in. Like, for example, since we are in the last stage of the discussion, this was a very technical discussion out there. So I'll just help you understand that how the flow of discussion went through. So we started with the discussion about how the DeFi is and where it is standing actually in the current space. So DeFi is decentralized finance, wherein it's actually challenging the traditional bank and traditional finances. So we have on one aspect we have DeFi, but if at any point of time you see that a new structure is always supported by DEXs rather than a centralized exchanges. So a lot of these DEXs, that is decentralized exchanges, support the newer tokens, newer use cases. So DeFi in the new DeFi, it comes to the newer DEXs kind of thing. But at the same time, when we took this DeFi aspects into the DEXs, there were a lot of challenges out there in the DEXs because there were a lot of this liquidity challenges, there were a lot of other challenges. So that's the flow of discussion which has just gone through. I know this could be very technical in nature, but to simplify things, it is very simple. On one aspect, there is DeFi taking its place via DEXs, but DEXs had a lot of challenges, but we overcome that via a lot of solutions. And now we are talking about how these DeFi would actually aspect. And the major reason why the banks were having a problem is because of the trust factor. Because today you do not know, when you put your money into the banks, they can do anything. But when it comes to DeFi, there is an inclusion of something known as DAOs. That is like people can actually vote on what you need to do. So like, for example, if there are 10 people out here, you put $100 into a bank or into an institution, then you can actually decide with your voting rights that thing this money can be used. So this is how a DAO would actually work. But in a traditional thing, this is not the same. This is not how it happens. It is just like the one centralized person sitting and actually thinking on what to do and what not to do kind of thing. But when this DeFi comes in, DAOs would step in, you would get a voting right that how things can be taken ahead. So that is the best thing out there with the DeFi.
I think the governance structure shifts. So in traditional centralized institutions, the governance structure is based on a level of minimum protection, which is the base capital requirements of a financial institution. And then the trust comes in from the public to the institution being the expert in deploying the assets in a manner that would maximize the value of the asset, and therefore the returns are shared between the public and the institution. I think where the trust erodes is where you see that transparency missing, or mistakes happening that are being covered up, and that kind of snowballs, and hence the GFC. But there are many, many moving parts to that. With the DAO, it's trying to address the issue of inclusion and accountability. But in and of that, there are challenges as well, because we are dealing also with humans that are relying on the programming. And the programming coding starts with the human as well. So the AI would learn, but that's based on the data sets. And I had a chat about this with Google the other day, so then the reliance on the accuracy of the algorithm will be backed by what data sets you have. So, as we grow and progress, I think there will be improvement, but it requires a lot of adoption, implementation by many, right?
Yeah. Only if there is a good amount of adoption and implementation, you'll come to it. Because what happens is, you might vote a lot of these different things, but it could be as a human, you would be actually doing it. But when it comes to the blockchain, when it comes to a DAO or a smart contracts, the whole DeFi aspect would work in a very, you can say, transactional manner. So smart contracts, you will put a DeFi thing in place and you will execute via smart contracts. But at the same time, and you might even vote as a DAO. But all these things would happen in one of a transactional manner. But back in the end, there is a human element also. Humans work more not on transactionally, but more on the emotional front. So that could be one of the challenge in the aspect of DAOs. But still, I could still vouch and say that it is much more efficient than the traditional finance part. So DeFi is something which will always come in. You cannot stop that, and it is completely unstoppable. And because the use cases are extremely strong, it will take place in this decade. So this decade is a decade of DeFi.
So for all of us hardcore capital markets persons, definitely we look forward to, the innovation in the capital markets, be it the DEXs and the DeFis and whatever new innovations coming to actually strengthen the capital markets, to improve the inclusion, and then the reliability to regain the trust.
Yes.
I think, So thank you very much, everyone, for staying with us. I hope you found this chat interesting. I definitely, found it very interesting chatting with Brian yesterday.
Yeah. So, it was very technical. I do understand that. So to simplify, I had earlier also said that we started with DeFi, we then went into that it will go to DEXs, and then there will be challenges in DEXs. Later on, we came up with the discussion about how it will then evolve, but at the end, there could be a challenge in the DAOs, and that's when we discussed about how the DAOs can be challenging kind of aspects. So that's good. Really happy to chat with you, Jacqueline, and plus everybody out here, you've been a fabulous audience. Thank you.